What if I told you there was a way to find high probability option trades before they explode, and even know perfect entries, exits, and strike prices to take within these option calls? Well, in today's video, I'm going to run you guys through the exact trading strategy that has taken me from $3,000 to well over $65,000 in just about 2.5 years' time. Now, the strategy is going to be made up of four main indicators and tools. Now, these being the break of structure, the EMA crossovers, fair value gaps, and Fibonacci retracements and extensions. Now, we're going to go over each one of these indicators in full and then also translate these onto a chart, showing you guys some real world examples where I have actually taken some calls or puts, and you guys can actually see the insane profitability that we have seen come from this strategy. Now, let's not waste any more time. Let's go ahead and jump right into this video and first check out our indicators. Now, the first indicator we're going to take a look at is going to be the break of structure. But before I do talk about this indicator, guys, it is important to be writing down your strategy. Whatever your strategy may be, as you are building it or as you may be using it, it is important to take notes and see how the strategy is working for you throughout time. Now, for an example here, I have my notes right here, and these are going to be notes pertaining to my strategy and my risk to reward. It is very important to keep this in mind, and this will help you stay more accurate to whatever trading plan you may have or strategy you may be using. But talking about break of structure here, guys, you are going to be identifying a break of structure from higher highs or higher lows. This is where you're identifying a trend. If we are in a clear downtrend, you're going to look for a break of structure to the upside, indicating that we might actually be finishing up this downtrend and in reverse, reversing out for a uptrend. From there, you guys can identify where this break of structure is. And if we are to get a bounce off of this break of structure, which you guys can see right here, this is where you guys are going to be looking for price to reverse. Obviously, we will pair this with the other indicators that we'll talk about in today's video. But if you are to see a reversal off of this break of structure, that is a good area to see, hey, maybe we had some good resistance or support hold right here, and we can push up even higher. Now, inversely, if we are to break through this break of structure, ideally you'd want to see a retest of the top. And from there, you guys can go ahead and eye the downside if we are to reverse down. So it is very, very simple identifying your trends. And then from there, you guys can identify where that trend is actually taking place, where it is starting, and where that trend would actually end if it is to be broken or retested. Now, taking a look at our second and third indicators, we're going to be taking a look at the Fibonacci retracement and Fibonacci extension tool. From here, we are going to take the Fibonacci retracement tool and draw out our golden zone, which I will show you guys how to do in just a minute. But from there, we'll be looking to enter in that zone for a possible reversal in trend. Now, this is going to look like something where maybe we see a large impulse move and then we see price pull back. Normally, the price can pull back to our golden zone where we can look to re-enter calls or get an entry in general from there playing for a move higher. And with the Fibonacci extension, this is how we are actually going to find our targets higher. This is going to help you guys with strike pricing, maybe finding where this call is expected to go if we are to get this reversal out of the golden zone, etc. And then here, this also removes emotional exits because you know the levels that you are trying to hit and you know exactly where price action is going to take you if we are to get that bounce out of the golden zone. Jumping into our 9 and 21 EMA crossover, this is going to be one of the easier strategies for new beginners to pick up, and it is one of the best strategies for intermediate and experienced traders to continue to use. I still use the 9 and 21 EMA every single day within my trading strategy, and this is exactly how I do it. Now, I wait for the 9 EMA to cross above the 21 EMA if I'm looking for calls. That is if I'm bullish, of course. And if I'm sitting bearish on the day, maybe I'm looking for the 9 EMA to cross below the 21 EMA. Now, in this example right here, our 9 EMA is going to be highlighted in the yellow. And where this crossover is happening is going to be an area where you guys are looking to start to look at calls. Now, obviously, once again, we are going to pair this with our other indicators, but this is another form of confirmation that can let you guys know exactly where price action could be heading. Now, rounding out this strategy, we are going to talk about fair value gaps. Now, fair value gaps are definitely the hardest indicator we'll talk about in today's video, but they are very easy to understand with a better breakdown. Now, I do have a breakdown linked right here where you guys can go ahead and check out a full-length video about how to use the fair value gaps. But quickly briefing over the fair value gaps here, it is going to be a price imbalance between buyers and sellers, and this is going to result in a 3-candle pattern where you do have a gap, whether that is a bullish or bearish gap. You're going to have a gap within the market. Now, 90% of the times, these are going to get filled. Obviously, there is going to be a few times where they aren't, and we'll talk about that as well. But there is multiple strategies that you guys can use with the fair value gaps. You can use it as a target to see if price can break through it and continue on, much like you guys are seeing right here. You guys can also use it to find reversals. So maybe we get a pullback right here, but we're rejecting this fair value gap that was created right here. We can actually take even more puts on the way down. That is going to maybe confirm that maybe we have a break of structure right here, and you have your other indicators paired up that will align with this and kind of let you know which way the market is looking to go based on this fair value gap. It is also a very important thing to just have in the back of your head, because there was a lot of times where you may take a call that you think looks amazing, but there was a fair value gap that just got filled and price is looking to roll over now. So pairing all this up, let's go ahead and jump onto the chart, check out our final strategy and what we are looking like profitability wise. Now that we know everything about the indicators that will be used in this strategy, let's go ahead and put it all together on the chart and make magic happen. Now before I do, I'm going to go ahead and make sure that you guys have this video liked. It's that one right there. Yep, perfect, sweet. Okay, now that you've liked the video, we can go ahead and show you guys exactly how I've used this strategy to generate consistent profitability for not only myself, but over 800 plus members that we currently have in our Discord community. Make sure you guys do click that first link in our description down below, join up on our free Discord, and if you guys are looking for premium, go ahead and check out exactly what we offer. We have all the bells and whistles that any profitable trader may need, so go ahead and check that out, and I'll see you guys over there. Now let's go ahead and jump onto the chart here and identify ways in the past that I've used this strategy to generate an insane amount of profits. Now taking a look here, we took these absolute banger puts that ran over 600%. Now you guys can see right here as I draw my Fibonacci retracement from a high to a low, you guys can see that in between this blue and orange-ish line right here, we're going to have our golden zone, which we have talked about in the past. Now, as we have talked about, this golden zone is going to be an area where we are going to look for a rejection or a breakthrough, and it just so happens that this lines up exactly with our break of structure right here, which is highlighted in this white line. And you guys can see exactly where we are looking for our break or where we are looking for our rejection. So as you guys can see, as price does draw down here, I am drawing up my Fibonacci retracement, getting my golden zone ready. I have my break of structure ready, where I say if we break through this, trend is going to flip back to bullish. If we reject from this and reject out of this golden zone, things are looking pretty bearish. And I saw this and I said, you know, if this happens, this is going to look very, very bearish. I'm expecting a larger drawdown if this is to happen. Now, using our 9 EMAs and 21 EMAs, we can see that this cross happened way back there, and we could have actually entered puts then, drawn it all the way back down and stayed in these, but we ended up getting our entry right here off of this retest of this golden zone and of this break of structure. From there, we absolutely poured all the way down into the end of day, and you guys can see we had a massive gap down the next day that just absolutely blessed us, and this thing ran over 600%. Now, not every single play is going to do this. This is obviously a cherry-picked play that I am using as an example, but I will show you guys multiple other examples, and this is just something that can happen from a strategy that you may have with high conviction. You know, you can actually run this longer if you understand what this means for your strategy. I saw right here after this, we had this huge gap up from the day prior, and I actually flipped back bullish 2 days later, and we're flipping that into a call, which is filling this whole entire fair value gap and daily gap that we have right here. And you guys can see we make an absolute bag again. This play went over 225%, and this was just off of buying from the daily open. We had a bullish sentiment for the day. I went ahead and bought calls off of the gap that we have prior, and then this would even back here confirm to me that we have broken our structure and could be on the way back up. Now, from then, we run all the way back up, and we are respecting these 9 and 21 EMAs. Every single time we touch the 9 EMA, we are either consolidating on it or we're bouncing above it. We do not really slip below this at all, and if we do, we jump right back above it, which is an insanely bullish sign. Now, this plays out all the way, and like I said, we made over 220%. And then following that, we get another beautiful break of structure play, where you guys can see that we have our golden zone, or our fair value gap right here on the 1 minute, or on the 5 minute, I'm sorry. You guys can see that we're targeting this fair value gap on the way down. Once we get this break of structure, you guys can see that these things absolutely pour. Now, I entered right here once we did get this cross, and once we did retest this resistance that we now have, and we ended up pushing all the way back down, and from there we broke not only the fair value gap but our break of structure, and that indicated to me that we could see more downside. Now, we did get a pretty strong bounce, and I wasn't able to get out with the I believe it was like 140% profit that we had, but I still made about 87-90% on this play, and of course that is more than plenty. I was looking to play this gap down, I'll tell you that right now. I was eyeing this gap. If we were possibly getting all the way down here, that would have been amazing. These would have gone well into the 1000%, I believe. Or even if we were to get down to this gap right here, either way, you need to have more confidence within your trades, and that is going to lead to a better outcome. Not pushing your trades, but maybe if you have some runners going, you know where to let these runners run, and you know exactly where they are headed. Let's go ahead and check out 2 more examples where I'm able to make a crazy profit from using 2 or more of our indicators within our strategy. Now, taking a look here, I draw my Fibonacci retracement from my low to my high of this move. You guys can see that leaves us with our golden zone right about here. And from there, I'm going to identify this as my golden zone. I'm also going to go ahead and draw out my Fibonacci extension. And from our low to our high to our low in this golden zone right here, you guys can see that I'm going to draw out some of my price targets right here. This is going to be my TP1 and TP2 of this move. This is where I'm going to look to sell most of my shares. Now, from there, you guys see we get this large impulse move up after just a little bit of chop and absolutely crush through this first TP. I didn't even sell any of my shares because we got this chop back here. Theta ate me up a little bit. Obviously, we have other variables to think about. But we went ahead and blew through this TP for about a 40% gain and then all the way up to our top TP where I sold out. I almost top ticked this thing right here where we sold out for about an 87% gain. Looking absolutely amazing on that trade right there. And it was almost picture perfect. Now, we actually draw all the way back down and you guys can see that we created a 5-minute gap right here. These gaps are interchangeable on time frame, so if you see a 15-minute gap, you can still target that gap on the 1-minute time frame, and I kept that in mind right here. You guys can see that we get this nice double bottom chart pattern right here, and this is off of our prior resistance or support right here. From there, we're looking to move up and we get this EMA cross right here. I can go ahead and zoom in for you guys and show you exactly where this is. You guys can see right here on this call out, this is where our EMA, and this is exactly where I'm looking to enter this trade once the candle closes. This is very important. Wait until the candle closes. And I would also look to do this on about the 3 or 5-minute time frame if you're looking for longer time frame options or if you're looking for a daily play. Now, from there, we're able to push all the way back up into this fair value gap, smash through this fair value gap, and we also smash through our break of structure, which I'll indicate as right there. And from there, we're able to push all the way up, and I made another 112% on this play. Let's take a look at one more example, and this example actually didn't go as planned. I did everything correctly and I executed this plan exactly how I needed to, and I actually still made a pretty good profit, and I'm so happy that the way that this strategy is set up not only protects you for the upside but also for the downside as well. So taking a look here, I drew out my Fibonacci retracement. I got my golden zone perfect. I entered off of this golden zone bounce. We also bounced off of this break of structure right here, so that gave me a lot of confidence that we would move back up. And that's exactly what we did. I drew out my Fibonacci extensions from a low to a high back down to the low of this move. And so I was targeting somewhere up by this 640 range. Now we didn't even get close to this range nor our second target right there. But what I did notice was that we did have this fair value gap back here. We did almost fill this fair value gap and now we're moving back out of it. It looks like we could have found this as possible resistance. And for whatever way or whatever reason it may have been, maybe it's because we left some fair value gaps down here on the 3-minute, whatever it may have been, we ended up flipping over and turning bearish. Now, the way that this strategy actually saved me was once we did get under this 9 and 21 EMA, I remember that once the 9 EMA flips under the 21, that is indicating to us that a bearish market could be coming into play and that trend may be reversing. Now, that is where I went ahead and exited, and I locked in about 35% gain within this trade. Now, it's nothing flashy. It could have been 100+% if we continued higher, but that isn't going to happen every single time. You have to be realistic. And for this case scenario, I was happy with this 35% because I was able to get out before things obviously got much worse and we pressed down. Now, as you guys can see, this is a great strategy, and we have talked about it time and time again. Now, with all this new information learned and this new strategy on hand, there is one more thing that I need to inform you guys about. Now, this comes down to every single trader. Every single trader has to have these two things to be consistently profitable for a long time. Now, these two things are going to be comfortability and discipline. Without one or the other, you guys are going to be lacking in something. You have to have both of these important attributes as a trader. Now, comfortability comes down to your setups and your trading and your strategy. If this strategy made no sense to you, I would not follow this strategy. If this strategy made perfect sense to you and this sounds like something that you want to at least give a shot, go for it 100%. Do your own research and make sure that you are comfortable with this strategy. But if you like to trade just support and resistance and say liquidity sweeps, then there is no reason to be playing around with Fibonacci retracements if that is what you are very comfortable with. Find indicators and strategies that you are comfortable with so that you can follow them closer, and this will give you guys a better and more consistent profitability once that does come. Now, on the discipline side of things, this is going to be in relation to times when we see that our EMA crosses to the downside and we're in a trade, but we want to let it play out, and then we end up losing that trade. Now, a good discipline mindset would have said, hey, let's exit this trade. Discipline lets us know that, hey, our strategy lets us know right now that we need to get out before things get worse, or we need to get out as things are on the way up. Whatever that is, your discipline needs to be followed, and you need to have these strategies written down. Like I said, I mean, I have multiple notebooks like this where I just have pages and pages and pages of notes talking about my strategy, talking myself through my strategy, whatever it may be. Get comfortable with your strategy, get to know it, get comfortable with yourself, get to know yourself, understand not only your comfortability with your strategy, but also the discipline that you have within yourself. Put it to work and go make some damn profits. All right, boys. Well, that was it from me. This was an amazing video to make. If you guys stayed till the end, thank you so much. I love making these videos for y'all, so show your support down in the comments, and I'll see you guys in the next video.